Hey everybody, it's your favorite gentleman coming to you live again. Your host of the number one podcast coming to you live in America. I'm Marcus, your favorite gentleman coming to you live. And today we're going to talk about a topic that I love talking about is cryptocurrency and investing. My absolute favorite topic to discuss. I can't wait for you guys. I've been looking forward to this speaker coming on the show all week for the past 2 weeks actually, and we are going to deep dive in to something that I know that you all have wanted to hear and learn about as well. So not going to hold this man back any further. We are going to dive right in. Stay tuned, stay with us. Here we go. Welcome back. If you are just tuning in to the Gentleman Style Podcast Show, I'm Marcus, your favorite host. And today we have Justin Klein coming to the stage, and he drives his company, KPP Financial Asset and Allocation Strategy, which helps create strategic market forecasts for him and his clients and analyzes individual investments for him and his customers. Mr. Justin joined KPP Financial in 2002, researching and analyzing securities and mutual funds. And since 2006, he has hosted his own daily radio show and program and podcast called Invest Talk. That's how I found him. Mr. Justin is a licensed real estate consultant, which also allows him to guide KPP Financial clients in the right direction based on their specific real estate goals. So as you can see, this man is very talented and well diverse and here to help you, help me, help us get to a better place financially. So help me welcome to the stage, Mr. Justin Klein.
Thank you for having me, Marcus. I appreciate it, and excited to distill some knowledge for all of you. I've been doing this for over 20 years, so definitely interesting times, and I'm ready to go.
Absolutely. Mr. Justin, thank you for being here on the Gentleman Style Podcast stage. I gotta ask this question. Why is it important now more than ever for people to be paying attention to their financial assets, and what's the most common problem or the most common mistake that we make when it comes to investing?
Well, I think that's pretty simple. We're in the midst of a pandemic, and near the end of it, hopefully. But you can see how easily life can be upended by something completely out of left field. And so having good financial habits and investing habits is very important, so that if you do have something come out of left field again, that you won't be destitute, you won't have your life ruined in that way. And so it's really important to stay focused for the long term. And then what are the mistakes that most people make? It's using emotions. FOMO. I think in this environment especially, there's a lot of people that see their friends making big money in crypto or AMC or other types of crazy Reddit stocks, and they have that FOMO, and the FOMO is not a new thing. I remember when I was pretty young, still kind of coming up in the game, and you had the real estate boom, and I had a lot of friends that were leveraging themselves to a bunch of different pieces of real estate, and a lot of them blew up during 07, 08. So I've seen this cycle. Even when I was really young, coming up in college, that was kind of during the .com bust, and I saw that .com, that the FOMO of millionaires that that were secretaries, a lot of these tech companies, Qualcomms of the world, and they held on to their companies too tight, and thought that their recent gains were going to just extrapolate to the moon, and they were going to be financially well off forever. And so this is just a cycle. There's cycles that happen, and you need to recognize that. And don't allow your emotions to have you fall prey to those cycles. You really need to have some perspective so that you don't get caught on the wrong side and really hamper your financial future over the long term.
Absolutely. That makes sense. So what, in your professional expertise, and this is not financial advice, but where do you see the stock market heading? Are we finally, because some people are pulling out, right? Some people are pulling out because they're coming close to retirement age, and they need to preserve as much capital as possible. And
Yeah.
so, where is the stock market headed? Are we finally, you see a turning point? Or is things on the up and up? Should I put my money in stocks, or should I consider other types of investments?
Well, what I like to say is it's not a stock market; it's a market of stocks. And so, right now what you're seeing, especially over the last week or so, you're seeing a strong rotation, and that's out of these I call them story stocks, Ponzi stocks, companies that were promising a huge change in an industry, right? Where they're going to come in and they were going to disrupt everything, and they're going to do it at all costs. They don't care about making money. They're just trying to grow their revenue. And their model was more to sell shares of stock than to actually make a profit for their business. And what's happening is that whole mindset is shifting. Now that interest rates are going up, the cost of capital is going up. And you're actually seeing strength in kind of the areas of the market that frankly are boring, energy stocks, commodity stocks, financials, industrials. A lot of those areas are actually doing well. They're actually up on the year. So you actually can do well in an environment where other sectors maybe not. And right now you're seeing this big rotation. And for really since the financial crisis, you've had this era of financial repression with interest rates lower and lower and lower. And what that's done is benefited the growth stocks, the tech stocks that where their multiples expanded, and because the cost of capital was next to nothing, they could issue shares and they could finance themselves very easily. Now, in an environment where inflation is going to probably be persistently high, maybe not as high as it was all of last year, but it's going to be persistently high, and interest rates are going to generally trend higher. The Fed is going to be more err on the side of being hawkish as opposed to dovish. That brings a different type of market environment, and so you can still do very, very well in stocks, even if there's a bear market. In 2000, the NASDAQ went down 70% from 2000 to 2003. And there were many sectors over that time that did actually well. Financials did well over that time. The Dow over those 3 years or so was only down in the mid-teens. And so, which is, kind of a basic pullback in the market. So that you can still do well, even though big sectors are kind of blowing up right now, especially the tech sector. So overall, I think the first half of this year is going to be rough. The back half will be better, but doesn't mean that you can't find great opportunities, even though the tech sector is kind of going through a rough patch.
Makes sense. Makes sense. Where have you been advising your customers, your members, your team to allocate their money? Where is the best use of my money right now in today's market?
Well, we're overweight certain sectors. So we have different models that we deploy for clients, and all the way from very aggressive down to moderately conservative, which would be all bonds. Those are mainly for, like you said, retirees. They're trying to get out of the market, just want consistent income. And then there's those that are younger that want to be more aggressive. The areas that we're overweight are energy. There's been a dearth of investment in the energy space, and the demand for energy continues to go up. Everyone wants to move to green energy, and I think that will continue. But we just don't have the infrastructure to deploy it at a fast enough pace to really keep up with demand. And there hasn't been enough because of ESG, because of just simply kind of a trend away from investing in new oil and gas exploration. There's not enough supply. And so those that do have supply, do have existing wells, they're going to continue to probably do fairly well as prices kind of spiral upwards. You're seeing that in Europe right now, where the price of natural gas is equivalent to $300 per barrel of oil. Simply because they're relying on Russia, and they aren't really delivering as much gas as they would expect. And so that's going to happen here. You're seeing that in the Boston area, where they're importing liquefied natural gas from Trinidad and Tobago, because they can't get the pipelines approved from the Bakken, which is just a few hundred miles away in western Pennsylvania, and where there's one of the largest natural gas fields in the world. And so you're just seeing that continued grind higher in energy prices. And I think that's the best place to be. I think uranium is a great place to be, because I think nuclear is going to be vital to transitioning to a green future. And so energy to me is the main focus in this world, where there continues to be increasing demand of emerging markets and just a reopening of the economy, and it's not being met with enough supply.
Makes sense. Makes sense. I told y'all, the man, the myth, the legend here today. We got to pay some bills, y'all. We'll be right back. We got to go to a commercial break. We'll be right back.
If you're looking for a reliable, professional trucking and logistics service, you've come to the right place. Musa Trucking is a veteran-owned and operated premier transportation provider that can help with all of your trucking and logistics needs. Musa is revolutionizing the trucking industry through strategic partnerships, the development of core personnel, and the use of cutting-edge technology. Our inventory system ensures that cargo ends up divided into the right trucks and reaching the correct destination. Our drivers are dedicated to transporting goods efficiently and safely. Contact us today to get started by visiting the website on the screen or by calling 757-756-5246.
We are back, y'all, and we have the incredible, amazing Justin Klein. And this man is spilling the financial tea, my favorite topic to talk about, the financial tea, and things that we should know and consider when investing, and what we should know in this new, I call it the new world. I consider it a new world because it's not the same. We can't go back to old habits. We can't go back to old traditions and the way we used to invest. We have to get experts like KPP Financial in our corner, guiding us and teaching us the right way to what to do with our money, because things are different now. Mr. Klein, I want to ask a question. Cryptocurrency seems to be the new trend, and it seems like it's a big player now, and it's here to finally, I can say, is it safe to say it's here to stay? It's not going anywhere. Why should we all be paying attention to cryptocurrency? And yes or no? What do you think? Is it something I should add to my portfolio, or not at all?
Well, I think cryptocurrency is definitely here to stay. I think blockchain is going to drive a lot of solutions that are sorely needed, and that will change the way society works in over the next 20, 30 years. But what I will say is we're very early innings, and I think the space, unfortunately, has been co-opted more by people that are just chasing returns and chasing gains than chasing real value. And that's my big issue with the space as a whole. And I compare it, there's kind of two time frames that I compare it to. From a technology perspective, I look at it kind of like the internet back in the 60s. Now, there was internet in the 60s, but it was universities moving data from one university to another. But there was no standardized protocol. Today, they call that TCP. And it took them a few decades to agree on a standard and then find solution or find value in moving data from one person to another, right? Creating a website, creating all the different things that the internet is today. That took many decades to evolve. And I think there's a lot of great minds in the space, and there's a lot of great energy behind using this technology to find solutions. And I think that will continue. Unfortunately, like I said, in the near term, it's been kind of co-opted by speculators. And for all the hodling in the world, it's very easy to say that when it's going up. It's very difficult to say that when the price is going down. And I suspect that if you do break, I think Bitcoin is at a crucial level right now, around 40,000. If you break below about 35,000, that could mean definitely the start of a kind of a crypto winter. And with the Fed withdrawing a lot of liquidity, I think that's more likely than not. So I don't think in the near term, I'm not that bullish on crypto. What I am bullish on the space is what is called a DAO, a decentralized autonomous organization. It's kind of what an NFT is. A lot of people talk about NFTs. Well, it's not in the actual image. It's in the community that you get with it. Well, in a sense, that's kind of what a DAO is, right? Is you can create a business on the blockchain or create some sort of entity on the blockchain, and you can structure it however you want based on various rules. And I think that will be what really transforms the world over the long term, are these organizations that are set up, governed, and created through the blockchain. So I'm very bullish on the technology and the value it can create over the next 20 or 30 years. Over the short term, I'm pretty bearish on the price of a lot of the tokens. And the second analogy I give the space right now is the tech bubble 1.0, which was the late 2000s or late 90s, excuse me. And if you go back and look at all these internet companies that were launched in the 90s and went IPO in the 90s, the vast majority of them went bankrupt, and they're worth nothing today. Now there are still your Googles of the world, your Apples of the world, but there are also your Ciscos of the world, whose price has not returned to those 2000 levels. So their business is still good, their business is still grown, but the valuations were so high that you didn't earn any return. You actually earned negative return. And so, there's only going to be a handful of those Amazons and Googles of the world in the crypto space that exists today. And the vast majority of the value, think of all the tech companies today, Facebook, that wasn't created until 2004 or 5. And so a lot of the value of what crypto will create doesn't even exist today, but will exist in the future. So, adding to it, doing research, but being very disciplined in this environment, because I do think in the near term, crypto is going to come under pressure due to tightening liquidity.
Makes sense. Do you recommend gold as still a good investment? Should I be allocating some of my money into gold and silver and precious metals? Any of those still come to mind? Are those still play?
Yeah, I think there's definitely a place for gold and silver in this environment. I know everyone says cryptos or Bitcoin's kind of made gold obsolete. I really don't think so. There's pros and cons with both. Crypto has its pros and cons, as well as so does gold and silver. Gold and silver broke out technically in mid 2020 as the Fed started to kind of print money. And as they've gone closer and closer to announcing tighter monetary policy, gold's kind of retrenched a bit. But technically, it's still in an uptrend. It's actually near major support. And if what comes to fruition, which I think it will, is that the Fed, what the market has priced in so far for Fed tightening in 2022 is completely winding down their balance sheet. So no more QE, and then raising rates. Right now, the market's pricing in 3.5 rate hikes this year. I really don't think they get there. You're in a amidst an election cycle, right? A midterm election cycle where they're going to want the economy to be stronger. So I think there's going to be political pressure to not be as hawkish. And you're going to see inflation numbers start to moderate here in the first half of this year. You've already seen that with some of the economic indicators that came in. A lot of supply chain issues are starting to abate. And so I really don't think they're going to tighten as much. And if that's the case, then gold and silver should do fairly well for the year. So I do think everybody should have some exposure to gold and silver.
Makes sense. I love that. I want to touch on my favorite subject is real estate, and you have your license in that and your expertise in that. Are we in a bubble, and is it going to pop? Are we still in this real estate bubble where we could potentially be overpaying for real estate, or am I way off?
Well, a lot of people, here's one issue a lot of people make, or one fallacy a lot of people make when it comes to a particular asset class. They use their recent history with that particular asset class as a guidepost for whether we're in a bubble or not, if it's a good time to buy or not. And a lot of people today have lived through 08 and they saw that real estate boom and bust. And so they have to ask themselves, are we in that same situation? What you have to understand is most crises, most boom and busts are not the same as the last crisis. So our last crisis, pre-COVID, was the real estate bubble. And what happens is those in the industry, those in government, they learn that was very painful, and they learn the lesson, and they start to make changes and to avoid that particular problem. And so the industry as a whole has not lent as crazy as they did pre 2008. They've made a lot of changes to make a foreclosure crisis kind of unlikely to happen. And so I don't think this is going to be driven by a foreclosure crisis, but it could be driven by a government policy. And I think that's really the most opaque thing with the real estate market right now, is that you saw with COVID, with mortgage and rent moratoriums. And when's that going to be finally unwound? And how many people now can't afford their homes or can't afford their rent? And how many landlords want to sell because they don't want to deal with being a landlord anymore? And that's something we haven't really dealt with. So it's hard to find that analogy of what, or that analog to see exactly what's going to happen there. Now, when it comes to inventory is still very tight. But what I think you're going to continue to see is this continued migration out of the coastal cities, the very expensive cities. So California, Northeast, even Seattle, Oregon, etc. They're going to move inwards, what they call the gateway cities. So obviously Texas, Austin, Dallas, Boise, Idaho, Phoenix, Arizona, areas that are just a lot cheaper. And you saw a lot of people moving to during early in COVID. I don't think that's a one-off thing. I think you had that big initial rush, and now it's going to be a slow trickle as more and more people realize, hey, my job is now fully remote, and I don't need to own $1 million home, $1 million 3-bedroom house, when I can go own a $300,000 3-bedroom house somewhere else in the country, and I have the same job, I have the same income, maybe I even have lower taxes because I'm moving to a lower tax state, etc. And I think that's going to continue. So I would look more longer term trends. If I own in one of those coastal areas where the median home is $800,000, $900,000, $1 million, I think that's an area that I wouldn't love to own longer term. In those gateway cities, I think those are probably great investment opportunities. But when it comes to your primary residence, I always say people get too caught up in the financial aspect of your primary residence, because that's not really the utility of it. You are owning your primary residence to live in, to have a good lifestyle, to be happy. And if you make money on it, I think great. But as long as you can afford it and it fits your lifestyle and you're happy there, that's far more important than anything else. So you definitely have to look at real estate in two different lenses, depending on if you're talking about your primary residence or an investment property.
Justin Klein, y'all. Woo. In a 3,000-foot view, this question comes up. It's the new kid on the block, NFTs, and you touched on it earlier. If you could, for me, I'm talking to me, if you could explain what an NFT is, and why is this such making a wave in all the media and all the news? What is an NFT and how do they work?
Well, an NFT stands for non-fungible token, and basically you're owning, quote unquote, owning this this piece of property on a blockchain, and you can transfer original ownership of it. Now, I think this has gotten overhyped. I think because there are some great applications for this. For example, ownership of maybe a song, for example, and transferring ownership and making sure if that is played anywhere that the original maker of that song is getting some sort of royalty, etc. And this can be all programmed through the blockchain, through this new technology. And I think there are some great applications for it. Unfortunately, like the whole crypto space, it's been kind of co-opted and overhyped, and the prices have gotten out of control. And a lot of the prices you see are people buying from themselves. There's not a lot of regulation in the space. That's one of the issues, is that it's very opaque and it's filled with a lot of fraud. And there's not a lot of safeguards for the average person. So that's why you have to be very careful. So what I think with NFTs is more, like I said, the value is in the community that it might give you access to. One of my best friends, he bought a doodle, and he's all about the community that the doodle brings. And so his value that he's getting out of it isn't in owning that piece of the artwork, digital artwork. It's in the community and the DAO that really he's getting out of it. And so I think there's a lot of interesting applications that will be great long term. But I think, once again, near term, there's just a lot of frothiness, a lot of overhype that is eventually going to come off. And that those cycles always happen. I think we're at the start of the down cycle. To me, I say this is similar to kind of the late 2000 era. Remember, the first tech bubble peaked in March of 2000. And I think we peaked last year. And we're in the hope phase in a lot of these, I call them Ponzi assets, crypto assets, where people are hoping that it's going to go up. But as, once again, liquidity tightens from the Fed, that's going to really bite a lot of these asset classes. And volatility typically happens pretty sharp and painful to the downside.
Makes sense. Mr. Klein, you have served me. This has been impactful and very, very helpful. I love the way how you broke it down and you dissected that for us. Sir, I hope I can get you back on the show in the future. I'd love to, as the world changes, right? We got the metaverse, we got Bitcoin, we got crypto, we got blockchain, all these changes. And I want to stay connected with you and grow with you, because it's changing at a incredible pace. And we need you. We need experts like you to break it down and simplify it for us, so that we can continue to make good investments and sound investments with our money, because we don't know. And education and networking is the key.
Well, I appreciate that. Yeah, hopefully I gave you a lot to chew on and a lot to take back and make good decisions. And I'd love to be on again.
Absolutely. How can my audience connect with you? How can we grow with you? And how can we learn more?
First thing is just subscribing to our podcast, Invest Talk. It airs every weekday, so we do shows 5 days a week. Myself and my partner, and it airs live 4 to 5 Pacific time up in Silicon Valley, and you can find it streaming live on our website, investtalk.com. And the best thing is just, once again, subscribe on Spotify, Google Play, iTunes to Invest Talk and listen there. And you can always go to investtalk.com and find some more. We have a newsletter. We have a lot of great tools for investors to continue to learn about how to make good decisions with their money.
Absolutely. There you have it, y'all. Check out the podcast and the website at the same time, investtalk.com, and stay connected. This is how we grow. This is how we survive. This is how we're going to do better. Mr. Klein, I want to say thank you. Don't ever quit. We need you. We need what you're doing, sir. You are phenomenal.
Appreciate it, Marcus.
Absolutely. Appreciate you. And I want to say thank you all, my audience, for tuning in. I hope this was helpful. I hope this helped you make better decisions with your financial future. And if it doesn't, check out Mr. Justin Klein on his podcast, on Invest Talk, on all social media platforms, and subscribe and check him out and grow, because that's the only way we're going to make it. Like I end every show, take care of your family, take care of your friends, and always, always take care of business. This is Marcus Norman, your favorite gentleman, signing off. And Mr. Justin Klein signing off. Love you guys. Bye.